Okay, so I'll just give a discussion on estimation of doubtful accounts class, and I hope you already have an idea as to how doubtful accounts works class. Okay, so basically you will have to maintain an allowance account class for the potential receivables that will have to be written off, for potential receivables that will not be collected, for potential accounts that will be defaulted, for potential accounts that will not be paid by our customers. This is uh, in pursuit of the matching principle class, because supposedly uh, the the revenues and the expenses class will have to be presented in the same year. So if we have sales in this period class, even though the collection will happen in subsequent periods, the recognition of potential losses on these receivables should be recognized in the same year in which the revenues were realized. And that is why, as you might have read class, the direct write-off method, meaning you will only write off the receivables on the period in which you are certain that it will no longer be collected. The direct write-off method is no longer allowed because it violates the matching principle. Okay, your accounts receivable class is driven by your credit sales. Okay, so any potential loss that we may have arising from these sales should also be recognized in the same period in which the sales that give rise to these receivables and potential losses arise. They should be recognized in the same period. So even though we are not yet certain that which of these accounts class, which of these receivables will not be collectible, we will already be recognizing in advance potential uh, receivables that will not be collected. And since we are only recognizing in advance class, we are only trying to record those that we expect to be not collectible class, there is estimation involved. Okay. And of course, our expectations, our estimates may not be necessarily correct ultimately class. Okay. And that's one of the possible concerns with the allowance method. But again, the allowance method complies with the matching principle. And because of the demands of the matching principle class, we will have to balance the downside of using estimates with uh, with the need to recognize revenues and expenses in the same period. Okay. And as you might have read, there are a lot of methods that you can use to compute for your estimated doubtful accounts, to measure or to estimate your doubtful accounts expense for any given period. And the three most commonly used uh, uh, methods class are your percentage of sales, percentage of receivables, and percentage of uh, percentage of AR, percentage of sales, percentage of accounts receivable, and your aging schedule. I will just share another discussion involving those three methods class. I'd like us to go directly na lang to the multiple choice uh, questions. Okay, let's try to answer 5-1 na lang. Okay. Marvelous Company reported the following information before adjustments at year end. Accounts receivable 500,000, notes receivable 200,000, allowance for doubtful accounts 20,000, sales 5 million, sales returns and allowances 30,000, and uh, sales discount 20,000. Because you'll notice that the figures are presented under two columns class. Uh, This should tell you that the amounts here are presented under debit and credit columns. Obviously, your sales is an income account, will have a normal balance of, so it will have a normal balance of credit. Also for your allowance for doubtful accounts class, the star of our discussion in this topic, Okay, again, it is a contra asset account. Okay, so its balance, normal balance, will be opposite to the normal balance of an asset. So that's why its normal balance is credit, because the normal balance of assets is debit. Okay, so in problem 5-1, we're given with 4 assumptions on how to uh, provide for doubtful accounts expense for the year. Let's start with the first assumption, class. Past experience indicates that 75% of all sales are credit sales, and that an average 2% of credit sales may prove uncollectible. So it's important for us to distinguish cash sales and credit sales, class, because only those that are on credit, class, have a risk of not being paid. For sales that are on cash, class, or that are on cash basis, definitely they are already paid. They're not even collectible because they are already paid, class. So there's no risk of default for our cash sales. So definitely this topic will revolve only around our credit sales, only those sales that are on account, sales that are not paid on cash. Okay, and it's important to know uh, amount of the amount of the portion of our sales that is in credit sales, especially if the method that we will be using will be based on our credit sales. Okay, so the problem is very direct, class. It tells us that uh, 2% of credit sales may prove uncollectible. So our estimate, our guess as to the portion of our receivables, or our receivables that will not be collectible, is a percentage of our credit sales. Okay, and all you have to do, class, is to multiply 2% with our credit sales. Okay, but it will be wrong for you to multiply 2% with 5 million, because your 5 million represents our total sales, and that this problem expressly tells us that our credit sales uh, is only 2%. Sorry, is only 75% of our total sales. So you'll have to get first the total credit sales. So 75% of 5 million will give us 3,750,000. That means our credit sales amount to 3,750,000. And since the problem tells us that that 2% of credit sales may prove uncollectible, all we have to do is to multiply 2% with 3,750,000. And how much is 2% of 3,750,000? 37.5. That will give us 75,000. And the question that you will have to ask yourself, class, is what is this 75,000? Is this the adjusted balance of my allowance for doubtful accounts, or is this my doubtful accounts expense? And as I have mentioned in another discussion, class, if the method used uh, pertains to an income statement account, class, then the amount that you would get would also represent an income statement account. Since the estimate here is based on credit sales, since it's based on sales, and since sales is an income statement account, then the figure that we will get should represent an income statement account as well. So between allowance for doubtful accounts and your doubtful accounts expense, which one is an income statement account? That is your doubtful accounts expense. So the product that we will get from multiplying 2% with 3,750,000 uh, will represent our doubtful accounts expense. So for this assumption, our entry would be to recognize to debit doubtful accounts expense and to credit allowance for doubtful accounts in the amount of 75,000. Now, what's the effect of this one? This entry will essentially increase our allowance for doubtful accounts expense. We'll increase our allowance for doubtful accounts. We will have doubtful accounts expense in the amount of 75,000, but after this adjusting entry, we will have the balance of our allowance for doubtful accounts will now be 95,000. Where did we get 95,000? We got 95,000 from 20,000, the unadjusted balance of the before adjustment balance of your allowance for doubtful accounts. Okay, and the doubtful accounts expense for the year in the amount of 75,000. So 20,000 plus 75,000 will give you 95,000. Okay, so first possible question under the first assumption is to compute for your doubtful accounts expense. Our answer is 75,000. How did we get 75,000? 2% times 3,750,000. Okay. Next would be second possible question. How much would be the adjusted balance? How much would be the balance after adjustments of your allowance for doubtful accounts? How much would be the balance of your ADA? Our answer now would be 95,000. That's the 75,000 adjustment at the end of the year plus the pre-adjustment balance of 20,000. Okay. We will have 95,000. Third possible question, how much would be the net realizable value of your accounts receivable? How do you get the balance of your, how do you get the net realizable value, class? The gross balance of your receivables, or simply your gross receivables, less the adjusted balance of your allowance for doubtful accounts. How much is the gross balance of our accounts receivable? 500,000. How much is the adjusted balance of our allowance for doubtful accounts? 95,000. So 500,000 minus 95,000 will give you 405,000. So under assumption A, the net realizable value of our accounts receivable would be 405,000. Okay. Just try to compare the figures as we go along A, B, C, and D class. Letter B, 1% of gross sales may prove uncollectible class. Again, the estimated doubtful accounts is still based on sales class. Okay, but it did not specify. Class whether it did not tell us that it is based on credit sales. So in this case, class, you will just have to follow the instruction class. The problem tells us it's 1% of gross sales, so it does not matter whether a portion of our sales are in cash or not. Okay, and if you'll notice, the percentage here is lower, class, because it takes into account the fact that our sales will include cash sales. Okay, so it's possible that the basis of our estimated doubtful accounts would include even our cash sales. So all you have to do is to follow the instructions given in the problem. So how much is our gross sales? Gross sales meaning without any deduction from allowances, returns, and discounts. So all you have to do is to multiply 1% with the gross sales. How much is our gross sales? 5 million. What's the percentage to be used? 1%. So 1% of 5 million will give you 50,000. Now, what is this 50,000? Is this the adjusted balance of the ADA? Is this the adjusted balance of the allowance for doubtful accounts? Or is this our doubtful accounts expense? Okay. Before we answer that one, why do I always ask whether or not the amount that we've computed is the adjusted balance of the ADA, that should be balance of ADA, or your doubtful accounts expense? Because depending on the method that you use, class, the amount that you might get may either be the doubtful accounts expense or the allowance for doubtful accounts. Okay, but as I've mentioned earlier, if the basis in the estimate is an income statement account, then the result will be an income statement account. If the basis is a balance sheet account, if the basis is a statement of financial position account, then the outcome would also be a statement of financial position account. Okay, so in this case, the basis is our sales, which is an income statement account. So the corresponding outcome here should also be an income statement account. Between your doubtful accounts expense and your allowance for doubtful accounts, which one is an income statement account? It is your doubtful accounts expense. So the 1% of 5 million, the 50,000, will represent our doubtful accounts expense. So what will be the entry here? Still debit to doubtful accounts expense and credit allowance for doubtful accounts in the amount of 50,000. And as a result of this entry, what will now be the adjusted balance? What will be the post-adjustment balance of our ADA? What will be the post-adjustment balance of our allowance for doubtful accounts? It will be 70,000. How did we get the 70,000? The 20,000 pre-adjustment or before adjustment balance plus the additional 50,000 provided by our adjustments when we computed for the doubtful accounts in the amount of 50,000. So the total would be 70,000. So first question, how much is your doubtful accounts expense for the year? 50,000. Second question, how much is the adjusted balance of your ADA? 70,000. Third question, how much is the net realizable value of your accounts receivable under assumption B? It would be 500,000, the gross receivable, minus your adjusted balance of your ADA, which is 70,000. So 500,000 minus 70,000 will give you 430,000. So the NRV under assumption B would be 430,000. Okay. C, an analysis of the aging trade accounts receivable indicate that accounts receivable in the amount of 80,000 may prove uncollectible. Now, letter C uses the aging of receivables method, and the basis of this method is your receivable. And what kind of accounts receivable? And what kind of account is your accounts receivable? It is a balance sheet account. It is a permanent account. It's a real account. It is a statement of financial position account. So if we are using this method, what will the outcome represent? It should also represent a balance sheet account. So between your allowance for doubtful accounts and your doubtful accounts expense, which one is a permanent account? Which one is a statement of financial position account? It is your ADA. So the ADA here represents the should be balance of your 80,000. Sorry, should be balance of your ADA. Okay, the 80,000 here represents the required balance of your allowance for doubtful accounts. This should be the balance of our ADA after adjustment. Okay. Now, to prepare the entry class, you will have to figure out if the pre-adjustment, if the before adjustment balance of my ADA is 20, and I know that the post-adjustment balance should be 80, how much should I change? How much should be charged? How much should be credited to my ADA to make 20,000 equal to 80,000? Okay, and that should not be difficult to figure out. You need 60,000 additional credit to ADA to bring the 20,000 before adjustment balance to the required balance of 80,000. So in your adjusting entry class, you now know that you will have a credit to allowance for doubtful accounts in the amount of 60. Okay. And the debit there would be your doubtful accounts expense. So if you are asked the question, how much is your doubtful accounts expense? It's not 80,000, but only 60,000. That's the amount you need to bring the 20,000 before adjustment balance to the required balance of 80,000. So again, first question, how much is the doubtful accounts expense under assumption C? 60,000. How much is the adjusted balance of your ADA under assumption C? 80,000. How much is the net realizable value of your accounts receivable under assumption C? 500,000 gross receivable minus the adjusted balance of your ADA in the amount of 80,000 will give you 420,000. Okay. Letter D class, assumption D, the policy is to maintain an allowance for doubtful accounts equal to 10% of the outstanding accounts receivable. So the method here is percentage of AR. And since the basis again is an AR, is an asset, is a statement of financial position account, is a permanent account, is a balance sheet account. So the corresponding outcome should also pertain to a balance sheet account. So you multiply 10% with the basis, which is our accounts receivable, and you will get 500,000 times 10%. You will get 50,000. And what does this 50,000 represent? Is this a doubtful accounts expense, or is this the required balance of our allowance for doubtful accounts account? Allowance for doubtful accounts. Okay, and the answer is the latter. Since it's based on AR, then it should result in our allowance for doubtful accounts. So the required balance of our ADA then is 50,000. Okay, but how much was the before adjustment balance? 20,000. And how much do we need to bring the 20,000 to the 50,000? We need an adjustment of 30,000. So your adjusting entry here would be debit doubtful accounts expense and credit allowance for doubtful accounts only in the amount of 30,000 because our target is 50 and we already have 20. So under assumption D, if you're asked how much is your doubtful accounts expense, it's 30,000 only, the needed adjustment to your ADA. If you're asked how much is your allowance for doubtful accounts, how much is the balance of your allowance for doubtful accounts, it would be 50,000, okay, based on the percentage of AR method. Third question, how much is the net realizable value of your accounts receivable? Simply 500,000 gross receivable minus adjusted balance of ADA in the amount of 50 will give you the net realizable value of 450,000. Okay, that's basically the difference between methods that use the sales as a basis class and your accounts receivable as a basis. Okay, the outcome can either be your doubtful accounts expense or your allowance for doubtful accounts. Okay, So just please try not to be confused when different methods are used. Let's proceed to exercise problem 5 dash 5 dash 5 dash. Okay, this one will use your aging schedule. Let's try to go over the uh, problem first. Okay. At the beginning of the current year, Rampant Company reported that the allowance for doubtful accounts has a credit balance of 170,000. Budget recoveries had and budgets written off in the current year were 30,000 and 235,000 respectively. Because why will this information be relevant, class? Because when you have recoveries, class, it will have an impact on your allowance for doubtful accounts. Okay, and if you have write-offs, it will also have an impact on your allowance for doubtful accounts. Okay, which we will illustrate later. The allowance account had been previously calculated as a percentage of net sales. Okay, so the method to be used, previously, before it is percentage of net sales. It was decided, however, to provide for doubtful accounts commencing with the year end, adjusting entry on the basis of an analysis of the age of our accounts receivable. I will need a paper here. I hope you're solving there also. Okay, the following schedule was prepared. For those that are not yet due, okay, we do not provide an allowance for uncollectability. We start with those that are 1 to 30 days past due, and we allocate or we assign a 5% uh, uncollectability, meaning we expect that 5% of those that are past due for 1 to 30 days to be not collectible. Class. For 31 to 60, it's 25%. For 61 to 90, we expect 50% not to be collectible. For those that are over 90 days past due, we expect that 100% will no longer be uh, will not will no longer be collectible. Okay, so all you have to do is to compute for the uh, to compute for the required balance of our ADA. Why do we say that the amount that we will get here is the required balance of our ADA, class? Because again, we are using the aging schedule, and the aging schedule uses your accounts receivable, which is a statement of financial position account. So all you have to do, class, is to get the percentage that is expected to be not collectible. Okay, the problem already gives us, class, or already segregates our receivables. This tells us that out of our total receivables, 1,200,000 class is 1 to 30 days past due. And based on our experience, 5% of which will not be collectible. So all you have to do is to multiply 1,200,000 with 5%. 1,012 times 5% will give you 60,000. So out of the 1,200,000, we expect that 60,000 will not be collectible. Then out of our total receivables, 100,000 is 31 to 60 days past due, and we expect that 25% of which will not be collectible. So 25% of 100,000 would be 25,000. 61 to 90% will have 50%, and it represents 150,000 of our receivables. So 50% of 150,000 will give us 75,000. Okay, and 120,000 times 100% will give us 120,000. Okay, so 60,000 plus 25,000 plus 75,000 plus 120,000 will give us total of 280,000. And again, you have to ask yourself, what does the 280,000 represent? This represents your required balance of your ADA, class. Okay, so if you are asked compute for your doubtful accounts expense, your answer should not be 280,000, class. Okay, your answer should not be 280,000 because uh, the 280,000 is the required balance of our ADA. We need the 280,000 to figure out how much is our doubtful accounts expense. And that's actually the requirement number 2. We have already answered the requirement number 1. How much should be reported as the required allowance for doubtful accounts? The answer is 280,000. Okay? And the second requirement is how much is your doubtful accounts expense? Before we can answer this one, class, if you'll go back to 5-1, we just compared, we just determined the needed allowance, the needed adjustment, the needed change to bring our before adjustment to the required balance, class. But in this case, we are not given with the before adjustment balance, class. Then you might ask, what is this 170,000 given in the first paragraph of the problem? Plus the 170,000 here is not the before adjustment. The 170,000 is the beginning balance. This is the January 1 balance. We need the December 1 balance, but still the unadjusted balance. Okay. Our December 31 adjusted balance, class, is the 280,000. To get our doubtful accounts expense, we need the December 31 unadjusted balance. And the December 31 unadjusted balance is not the same as the beginning balance, class, because during the year there were transactions that affected our allowance for doubtful accounts. And what are these transactions? These are the recoveries that I've mentioned earlier, class. These are the recoveries and the write-offs, class. Okay. So you'll have to figure out first how much is the December 31 balance, unadjusted balance. You cannot just immediately compare 170 and 280, class, because again, the 170 is the balance as of the start of the year. Okay. So let's determine the balance at the end of the year before adjustment. Okay. Take into account the transactions that will affect ADA. Bad debt recoveries. What's the effect of recoveries of bad debt, class? Okay. There are two possible treatment for recoveries, class. It's either you set up the accounts receivable, or if it's immediately paid, then you might not need to set up the previously written off receivable and just immediately recognize cash. Okay. In any case, when there are recoveries, class, your bad debt recoveries will increase your ADA, because the entry, class, because everything affecting your your receivables, class, the write-off and the recovery of your receivables will be cleared through the ADA account. So if you have recoveries, it's either you set up an AR or you immediately record cash. So your debit will either be cash or accounts receivable. And your credit, class, would be your allowance for doubtful accounts. Okay. And this means that you have credit, that we will be crediting our allowance for doubtful accounts for 30,000, representing the recoveries. Okay. So we started with 170,000, class, and because of the recoveries, our ADA increased by 30,000. Okay, but what else affected our ADA? We had write-offs during the year. Okay, we have 235,000, and how does a write-off affect our ADA? Write-offs, class, decrease your ADA, class. Write-offs decrease your ADA because instead of charging it and removing it from the receivables directly, it will have to course through the allowance for doubtful accounts. Okay, so the entry when you have a write-off, class, is to debit your allowance for doubtful accounts and your and you credit the receivables that you are writing off. So again, the entry to recognize the write-off, class, would be debit ADA and credit AR in the amount of 235,000. Okay. So based on this, class, the balance at the start of the year was a credit of 170. It increased by 30, so that means we had a balance of 200. Okay, and then we have write-offs in the amount of 235,000, which is a debit to your ADA. So after these transactions, class, the balance of our ADA would be 35,000, but this is a debit balance. Okay, this is not This is in the negative balance class. Okay, so the balance of our ADA is 35,000. Okay, based on the this is the balance after taking into account the 30,000 recoveries and the 235,000 recovery. Okay, but we do not actually end at the debit of 35,000 class, and this is where you have to be careful of. Many students would forget about this one because they would forget to include the 30,000 here based on the aging schedule. Okay, the 235,000 write-offs class were the write-offs during the year, but because of the aging schedule that was prepared at the end of the year, there has to be an additional write-off in the amount of 30,000, and this 30,000 was not yet part of the 235,000. So you will have an additional write-off in the amount of 30,000 plus. Okay, so you will prepare another entry, debit ADA and credit AR in the amount of 30,000. Okay, so the balance now of our ADA would be a debit of 65,000 plus. Okay, it's not in its normal balance. Okay, but we know that its adjusted balance should be 280,000. It should be 280,000. Okay, so this is now the challenge. Many students will get confused because the balance now is a negative balance. The balance now is a debit balance. We need the balance to be 280,000. Okay, and before adjustment, the balance is 65,000. Okay, common error on the part of the students. How much is the needed adjustment? They will just deduct the 65 from 280. Okay, because your doubtful accounts expense is supposed to be the needed adjustment to bring your ADA to its adjusted balance. Okay, so some students understand that the balance is 65,000 debit, but they will simply deduct the 65,000 from 280. So many students would wrongly answer 215. But the needed adjustment to bring the debit balance of 65 to a credit balance of 280 is not just 215. Think of the debit balance as a negative amount. We need to bring it to positive 280. How much do you have to add to bring negative 65 to positive 280 plus? And that will be the answer to our doubtful accounts expense. Okay? Why was it in problem 5-1 class? We just deduct the before adjustment balance from the required balance because the before adjustment balance was a credit balance. Okay, it was at its normal balance. Here we have a negative balance, we have a debit balance class, so we'll need more to bring it back to its required balance. Just look at it as a negative balance class if it has a debit balance. So what do we need to bring negative 65 to positive 280? We need additional 345,000 plus. And that would be the doubtful accounts expense for the year. So, three things to be careful of in this problem. Number one, the 170,000 is not the ending unadjusted balance. Okay, it's actually the beginning balance. And the beginning balance is not necessarily the unadjusted balance at the end of the year, especially if you have recoveries and write-offs during the year. Second thing to be careful of is whether or not you have additional write-offs to recognize aside from the write-offs already recognized during the year. Okay. Third thing to remember, be careful if the unadjusted balance of your ADA is a debit balance. Okay. You have to look at it as a negative amount for you to determine correctly the correct amount of doubtful accounts expense. So again, to answer the question, the doubtful accounts expense for the year would be 345,000. To answer number 3, what is the adjusting entry? Still debit to doubtful accounts expense and credit allowance for doubtful accounts in the amount of 345,000. Question number 4, what amount should be reported as net realizable value of your accounts receivable at year end? You add your total receivables class. You have your 1,700,000, you have your 1,200,000, you have 1,000,000, you have 100, you have 150, you have 120. Okay, but careful, Kasaya, you do not include the 30,000 anymore because this was already written off. Okay, so you will get a total of please help me here, class. 1,007,000 plus 1,200,000, that's 293,150. 3,270,000. So to solve for an NRV, gross receivables minus the adjusted balance of your ADA. So 3,270,000 class minus 280. The NRV of our receivables in this problem would be 2,990,000. Okay, it's 2,990,000. Let's proceed to problem 5-7 class. The main issue here is that we are not immediately or directly given with the rate that we will be using, class. What's the question here? Prepare journal entry to set up the allowance for doubtful accounts, compute for doubtful accounts expense for the current year, determine the NRV of the accounts receivable. Okay, let's read the problem first. From inception of operation, Savvy Company carried no allowance for doubtful accounts. So that's wrong. That does not comply with the standards. Uncollectible receivables were expensed as written off and recovers were credited to income as collected. During the current year, management recognized that the accounting policy with respect to doubtful accounts was not correct and determined that an allowance for doubtful accounts was necessary. A policy was established to maintain an allowance for doubtful accounts based on historical bad debt loss percentage applied to year-end accounts receivable. The historical bad debts loss percentage is to be recomputed each year based on all available past years up to a maximum of 5 years. Okay. Accounts receivable balances were 1,250,000 and 2 million on January 1, 2021 and December 31, 2021 respectively. Prepare journal entry to set up the allowance for doubtful accounts. To set up your doubtful accounts as of uh, January 1. Okay. So for January 1 class, the start of the year, we'll just have to, what method are we supposed to use? The historical budget loss percentage will be computed issue based on all, no. A policy was established to maintain an allowance for doubtful accounts based on historical budget loss percentage applied to year-end accounts receivable. So the rule is a percentage of AR class. So whatever amount we'll be getting would already be the required balance of our ADA. So for January 1, 2021 class, for the start of the year, we will have to use the information available for us for the past years. Okay, supposedly it would be uh, on the past year's class for a maximum of 5 years. As of January 1, 2021, the available information to us is only 4 years. Okay, the 2020, 2019, 2018, and 2017. Okay, so we'll have to compute for the percentage that we will have to use. You'll really just have to figure out what the problem is telling you to do, class. And although I can say that the instructions given in the problem would make sense, but the best way for you to be prepared for this kind of problem is to answer as many problems as you can, to be familiar with as many scenarios as you can, class. So basically, what the problem is telling us, class, is to compute for the percentage based on the past experiences, class. Okay, so the percentage is to be recomputed each year based on all available past years up to a maximum of uh, 5 years. Okay, so our write-offs class will have to take into account the write-offs from the previous years and the recoveries. But since we are still on January 1, 2021, we will only be using the information for 2020, 2019, 2018, and 20 20 17. Okay, So how much was written off in 2017? 15,000, 2018, 40,000, 2019, 50,000, 2020, 65,000. So based on the past 4 years, we expect that how much is to be written off? 15, 40, sige, I'll add this on my own. 15 plus 40 plus 50, 105 plus 65, 170. Okay, but there were also recoveries in the amount of 10,000. So total write-offs was only 16,000. Okay, and so out of our, then it would now be compared to our credit sales. So total write-offs was only 160,000 class out of total sales for the previous 4 years in the amount of 1,500,000, 2,200,000, 3,000,000, and 3,300,000. So this would be 5, 7, 10 million. Okay, so we were able to sell 10 million in the first 4 years class, and we only had to write off a net amount of 160,000. Why do I say net amount? Because out of the 170 we have written off, we were able to recover 10,000. So the correct write-offs for the past 4 years was only 160,000. What does this tell us? That the applicable the applicable rate here is 160,000 divided by 10 million. That will give us 1.6%. Okay, so the applicable rate here is 1.6%, which is to be applied to the year-end accounts receivable. Okay, the January 1, 2021 class is expected or presumed to be the ending balance also for 2020. So to determine the initial balance of our ADA, we only have to multiply 1,250,000 with the 1.6%. Okay, so how much is 1,250,000 times? Help me here, class. 1,250,000 times 1.6%. 1,250,000 balance at the end of 2020 or beginning of 2021 times 1.6%.
20,000.
20,000. And since we are using percentage of AR class, the amount that we will get will already be our balance of our ADA class. Okay, that should already be our allowance for doubtful accounts. So if you are asked how much should be the initial balance of your ADA for January 1, 2021, it will be 20,000. But the debit here, class, will not be doubtful accounts expense anymore, class, because this is supposedly for the past year. So this will now be charged directly to your retained earnings. So the entry to set up your ADA will be debit retained earnings and credit allowance for doubtful accounts in the amount of 20,000. Okay. Let's go to the end of 2021 class. For 2021 class, we will not be using the same rate because in 2021 we have additional information. Okay, we have additional data to estimate our write-offs. Okay, which is the information for 2021. And since the policy was to use the past 5 years, then we can still include 2021 and 2020 and 2017. So we can add everything from 2017 down to 2021. Okay. So as what we have computed earlier, class, write-offs from 2017 to 2020 is 170. Then we will add 88. 170 plus 88 will give you 258,000. Now, total recoveries, 2, 3, 5, and 10 would be 20,000. 20,000. So, the net amount of write-offs for the past 5 years would be 238,000. Divided by the credit sales for the past 5 years, it was 10,000 for the first 4 years. Add 4,000 for 2021. Total sales in the past 5 years is 14,000. So, help me here, class. 238,000 divided by 14 million. How much would that be?
1.7%.
1.7%. And that is the rate that we will be using to determine the required balance of our allowance. So how much is 1.7% plus times the ending balance of our AR, which is 2 million. This is easy. 2 million times 1.7% will give us 34,000. And what is this 34,000? The 34,000 is it the doubtful accounts expense or the allowance for doubtful accounts? Again, since this is based on our AR, this would be our required balance, or the should be balance of our allowance for doubtful accounts. So if you are asked how much is the balance, the required balance or the adjusted balance of your ADA on December 31, 2021, your answer should be 34,000. Now, possible question would be, how much is your doubtful accounts expense? How much is your doubtful accounts expense for 2021? Okay. Are you just going to compare 20 and 34 class? Diba the 20 was the January 1 balance. Okay. And if you remember in problem 5-1 and 5-2, we just compared the before adjustment balance and the required balance. Okay. So is it simply 34,000 minus 20,000? The answer is no. Because the 20,000 we have computed earlier is not the unadjusted December 31 balance. The 20,000 is the January 1, 2021 balance. To determine our doubtful accounts expense, you have to determine your December 31 unadjusted balance. And how do you arrive at your December 31 unadjusted balance from the beginning balance of 20,000? You take into account the transactions that will affect ADA throughout the year. And what are these transactions? These are your write-offs and recoveries. Okay, take note. Did we have write-offs during the year? Yes, if you look at the table in 2021, we have write-offs in the amount of 88,000, and we even have recoveries in the amount of 10,000. So let's try to journalize this class. How do we record accounts? How do we journalize write-offs? Diba the entry to record write-off is debit, ADA, and credit, accounts receivable in the amount of 88,000. And how do we record recoveries class? Debit, AR, and credit, ADA. And how much recoveries did we have during the year? 10,000. So in these two entries, we will have a debit to ADA in the amount of 88,000 and a credit to ADA in the amount of 10,000. So if we had 20,000 credit balance as our beginning balance, then we debit 88,000 and we credit 10,000. How much then was the unadjusted December 31 balance? I'll need your help here, class. Beginning balance of credit, 20, then debit of 88, so minus 88. Another credit of 10, so this would be plus 10. So minus 30. So the unadjusted December 31 balance would be 58,000. This is a debit balance, okay? And what was the required balance of our ADA class? What was the required balance of our ADA? 34,000, okay? And the unadjusted balance was debit of 58 or negative 58. So how do we bring negative 58 to positive 34? What adjustment do we need to bring debit of 58 to credit of 34? Will it just be deducting 58 from 34? The answer is no. To bring negative 58 to positive 34, we will need an adjustment of 92,000 plus. Okay, so our entry should be debit, doubtful accounts expense, and credit, ADA in the amount of 92,000. I really hope you're following class. Okay, so if we're asked how much is the doubtful accounts expense here, the answer would be 92,000. What's the purpose of the 92,000? To bring the unadjusted balance of 58 debit balance to the required balance of 34,000 credit. Okay, final question. How much would be the net realizable value? Since the ending balance was 2 million and the required balance is 34,000, the NRV of our accounts receivable would be 1,966,000. Okay, let's have problem 5-8. Problem 5-8 is somewhat similar to 5-6. It's just that the complement percentage is given. Instead of being given with the percentage not collectible, we're given with the percentage that is collectible. So be careful, class. Do not just blindly multiply and multiply, class. 5-8. First question would be determine the allowance before adjustment. Okay. and determine the required allowance for doubtful accounts. Okay. Let's read the problem. From inception of operations, Paramount Company provided for uncollectible accounts receivable under the allowance method using the percentage of sales method. The balance in the allowance for doubtful accounts was 500,000 on January 1, 2021. Because I cannot emphasize this enough, class. The beginning balance is not necessarily the ending unadjusted balance, class. During the current year, credit sales total 20 million. Interim provisions for doubtful accounts were made at 2% of credit sales. Okay, it's possible, class, that you do not wait for the end of the year to record uh, adjustments to your ADA. Okay, uh, by providing interim amounts, class, you will avoid the scenario wherein your ADA will have a debit balance. 300,000 of bad debts were written off, and recoveries of accounts previously written off amounted to 50,000. Okay, the aging of accounts receivable show the following summary. Based on the review of collectibility of the account balances in prior to January 1, 2021 aging category, additional accounts totaling 100,000 are to be written off. Okay, you'll have to be careful, class, because this means that you will have to apply the 25% here only to the 400,000 plus. Because out of this 500,000, 100,000 is to be written off already. Okay, and that means only 400,000 will have to be given an allowance, class, because the 100,000 of which is to be written off already. Okay, let's answer the first question. Determine the allowance for doubtful accounts before adjustment. Okay, at the start of the year, it was 500,000. And what happened during the year? During the current year, credit sales totaled 20 million. Okay, interim provisions for doubtful accounts were made at 2%. So if you provide for interim provisions for doubtful accounts, class, your entry there would be the same as the adjusting entry at the end of the year. Debit doubtful accounts expense and credit allowance for doubtful accounts. Okay, how much interim provision were provided? How much doubtful accounts expense were given initially? 2% of credit sales. How much is 2% of 20 million? 20 and 200. It would be 400,000. So we prepared an entry debiting doubtful accounts expense and crediting ADA in the amount of 400,000. So the interim provision will increase our ADA by 400,000. 300,000 of bad debts were written off. And what's the effect of write-offs to our ADA? Again, it will decrease because what's the entry? Debit ADA and credit accounts receivable. Okay, so our ADA will decrease by 300,000. Okay, and recoveries of accounts previously written off amounted to 50,000. What's the effect of recoveries to our allowance for doubtful accounts? It will increase because the entry is debit, accounts receivable or cash, and credit, allowance for doubtful accounts. So we had a debit balance of 500 initial balance, additional 400,000, deduct 300, and add 50. So this one would be 900, 600. This will give us 600, 50,000. Okay. But aside from these transactions, class, if we continue with the problem, it tells us that additional accounts totaling 100,000 are to be written off uh, on December 31, 2021. And again, what's the effect of write-off, class? Decrease our it will decrease our ADA. So we'll further deduct 100,000 from 650. This will give us 550,000. And this will now be the December 31 unadjusted balance, class. So the December 31 unadjusted balance would be 550,000. Okay. Second question here is determine the required allowance for the doubtful account. So again, we'll just have to rely on the aging schedule. November to December, 5 million. Then the portion that is collectible is 95%. So please do not multiply 95% with 5 million class. What we need is the percentage that is not collectible class. So if the percentage that is collectible is 95%, what does that tell us? The percentage that is collectible is only, that is not collectible is only 5%. And 5% of 5 million will give you 250,000. Okay, that's for the November to December. For July to October class, you have 2 million times, again, do not multiply the 90%, multiply the complement, which is 10%, because only 10% is not collectible. So 2 million times 10% will give you 200,000. Next, for January to June, balance is 1 million. Only 75% is collectible, meaning 25% is not collectible. So 1 million times 25% will give you 250,000. And then prior to January 2021, it's 500,000, but we have already written off 100,000 out of this 500,000. So the remainder that will require an allowance will only be 400,000. Out of the 400,000 class, only 25% is collectible, meaning 75% is not collectible. So 400,000 times 75% will give you 300,000. Okay, so total class would be it was 250 from November to December, 200 from July to October, 250 again from January to June, and 300,000 for prior to January 1. So 250 plus 200 plus 250 plus 300 would give us 1 million. And that will be the required balance of our ADA class. Okay, the adjusted balance of our ADA should be 1 million. Okay, and we've already computed earlier that the unadjusted ending balance of our ADA was 550. So that means the adjustment for the year at the end of the year would be only 450,000. The entry would be debit, doubtful accounts, expense, and credit, allowance for doubtful accounts in the amount of 450,000. But in case you will be asked, how much is the doubtful accounts expense for the year? Okay, how much is the doubtful accounts expense for the year? Usually our adjustment was already the doubtful accounts expense. Whatever was the needed adjustment was already our doubtful accounts expense. But for this problem class, if you will be asked how much is the doubtful accounts expense for the year, it will not just be 450 class. Please take note. It will not just be 450. Why? Because there was already an interim provision for doubtful accounts. During the year, we already recognized doubtful accounts expense in the amount of 400. And at the end of the year, we recognized an additional 450 as an our adjusting entry. So if you'll be asked, how much is the total doubtful accounts expense for the year? Your answer would be 850. 400 initial amount, 450 additional adjustment. Okay? Very important. How much is the total doubtful accounts expense? It's 850,000. Okay, so we do not have time to discuss problem 5-9. Hopefully, you've taken care of the multiple choices class, multiple choice questions, and I also will try to give you the answers class.